Good morning, everyone. This is Manoj here, and what I'm going to do today is we are going to try and analyze what different sectors of the Indian markets are doing. And I've done this analysis before, and we predicted a drop somewhere back in November. In fact, November end, November, December beginning, and I did another review of the same around January end, and we saw the fall happening, and we were half the distance away from the falls that we were seeing then. And we've probably come very close to where the fall might get now a little bit sideways, and we begin to consolidate in the market and look forward to seeing what's the next phase that we can do. So until we analyze and see what's happening on the charts, we can't get a view. So I'm doing a live analysis with you on this particular video and hoping to find answers as to what I should be doing and what you could be doing using the cues that I analyze here in your trading. So we'll start with the monthly on every chart and go down to the daily to get a perspective on the multi-time frame analysis. So starting with the CPSC, which is the one that is the first chart that I'm looking at. What do we see? We've seen a good fall right from the month of August. We've been falling August, September, October, November. December, we had a little bit of a reprieve, but we didn't end up higher. And February again was a pretty dark, was a pretty big fall, like we saw in October. February also gave us a big fall, but all of that now is, getting support at this particular fair value gap on the monthly chart, and we're seeing some kind of a bounce on the monthly. Let's take this and fine tune this on the weekly and see what we're getting in the weekly. So I will use the weekly chart now to tell me what's happening. So again, in the weekly also, we are in a good fair value gap, which has been giving us support for the last 4 weeks. So we've been sideways in the last 4 weeks, and we've begun to move higher on the weekly. We have actually done better than what we did in the last 2 weeks, the 3 weeks that have followed, and we have now closed somewhere in a doji formation for the last week. And this is the crucial level that we are looking at. If we sustain above this level, this should be good. And we could be led to just about here, which is the next fair value bullish, fair value bearish gap, the resistance area that we see on the chart. So that's a 400-point move that we could expect for 500-point move. So this could be a 10% move that we could see in the CPSC. Now let's go to the daily and see if I see something different to what I see here. And let's look at the daily. So we are currently in some kind of a resistance. Right at the resistance, we've been trying to battle this resistance, and we've gone lower once or twice, but we've bounced back every time that we've gone down. So what do we think we're going to head to? Well, I see some liquidity areas on the top, which are interesting. So I see this liquidity area as a good draw, and I am hoping that we will see this soon. Now, the ATR of this is about 135. We could expect to move about 150 to 170 points every week. So that should be 4 weeks till we get to the top. And this is what I expect on the CPSC. So it looks slightly bullish to me because we have seen a good reversal and we're sustaining on the top. We're gathering some more positions here after this fall. We're digesting the good rally that we had, and probably we will move higher once we had some kind of a consolidation. Here is the readout on this particular chart. Let's go to the next one, which is the bank Nifty, and we'll start. There are some drawings that I have here. I'm going to remove the drawings so that we can get a fresh template. We'll start with the monthly. And what do we see on the monthly? On the monthly, we don't see much support. Now, this is disturbing. We don't see a lot of support, and best support on the monthly is way down at this area, which is really deep. It's 42,750 odd. Now that's really deep. Let's see what else can we look at and see what else can we have. So let us get some cues from the weekly. So currently on the monthly, we don't see any support. and we're still falling. We have had a little bit of a sweep from the lows of the month, but this monthly candle is not yet closed. So I'm not going to take this as something which is totally formed. This can't be the monthly Q that I can take. Let's go to the weekly and try to get some Qs there. So in the last week, we have swept some liquidity from the bottom, but we haven't closed above the preceding week's high. So that's again not a very good sign. I would still feel, you see the lower lows, the lower highs and the lower lows on this, we could be heading lower. So what we have in store is a fair value gap, which shows up here, which is somewhere around 47 to 45. So from 48,000 to 47 to 45. Guys, I think we could be heading lower on this chart. Now, I can be wrong, but this is the reading that I'm getting. If we don't sustain and go above 48,800, that's the threshold that I'm looking at. If we don't sustain above this level, we are not going to go higher. So we might see some kind of a move up and then come down. So we could face, either we could see something like this happening and then bringing us down. I'm sorry for the color that we are using here. So maybe I can convert this into a red color that makes it a little more readable. So this is what I think we could be heading for. We could be heading for this level in this fashion. These are the two options that we have, but we could be heading lower, and then this to me will be the target that we are looking to get to. So this will be a target that is interesting, and this is where I think we will eventually end up with Bank Nifty 46,170. So I see another 1,500 points, which is so easy, which is just about 2 weeks or 1 week's move, and then we can get there. Let's look at the daily and see if changes anything for us. So that's the daily. Sorry, this is the daily. Anything that changes on the daily? We are sitting in some resistance in a fair value gap, and that's the reason we're trending lower. There are no fair value gaps to support this below this. So, and there are no fair value gaps here. There was a fair value gap on the weekly, but on the daily that doesn't go inside. That's the reason 46,170 looks imminent to us, right? So this is the readout from the Bank Nifty on the daily. We are weak and we could be falling lower. The third chart that we look at is the Nifty private banks. Let's go to the monthly and see no support like we see. We don't see support in the Bank Nifty, and we've been consistently falling, and we are below the last week's low, and we could be heading for this low in the first phase, and then we could be heading for this in the next phase. These are the two markers that we're looking at. So I'm going to mark them out for you. 23,514 and 22,916 are coming. Let's go to the weekly. Again, on the weekly, it's nothing interesting. We do have some kind of a fair value gap here, which supported the price on the way up. But if you see, the price hasn't had the strength to go further up. It did not cross the last swing high, and it's coming down back in. So that leads me to believe that this particular target that we have placed for ourselves is something that can happen. And the first target on my radar is going to be 23,514, and then we could head down to 22,916. That's the readout that I'm getting from the weekly chart. Let's go to the daily and see if there's anything different that we can get across to. No, nothing different. We are in a fair value gap, but the rejection from the fair value gap is meeting immediate resistance on the top, and the resistances are being respected. So if you see the three fair value gaps on the downside, which are being respected continuously, we saw that on the daily in the last candle also. And if you see, we have swept the high of the last candle on the top. So as it is, the first target for us is this level. And then the next target is somewhere around this level. So these are the two targets, immediate targets that can come to us on Monday or Tuesday. and then we can move down to 23,514 and 22,916. So that's the reading for the private banks. Let's go to the next one, which is the FMCG. Let's look at the monthly. Yeah, here we do see that we're in some kind of a support area. So in the monthly, I do see that we're in some kind of a support area. And in the last month, we met the support and we have probably arrested some fall. But again, there is a fair value gap, a bearish fair value gap, which is under construction. Remember, this is a monthly candle. So this fair value gap is not finished. It's not in a finished state. The monthly candle has to close for this fair value gap to give us the right picture. So this fair value gap is not something that I'm going to look at, but yeah, there was a big candle and we could return back to the 50% of that area. So we could be heading higher, but let us see what the weekly can offer us. And the weekly is giving us similar cues. We have some fair value gap, which is being supported here, which is a good move. But again, I mean, the resistance here is not being taken away. It is a big resistance down, and then there's a breakaway gap, and then the next gap is again taking us down. So, and this particular move has been able to push us higher. We did go to the top of the last week's candle, but what we're seeing is that we have swept the top of this candle and we are lower. We're back into the body area of this particular candle. The first target that I have again in mind here is this level, which is 50,501 odd, which is where I think we will be heading in this week. So we will be a little weak as far as this chart goes on the weekly. We will look at the daily and try to find out if I can find something else. Well, yeah, no big shakes. There is a fair value gap here. We took out, but we're facing resistance on the top here. So yeah, this is a little bit of an encouraging sign, but let us go to the Nali and see if I really get to see something. Yes, we probably need to clear this level. We need to clear this level before we can look for longs in this particular chart. So unless we get to see some longs above 52,626, I'm not going for any longs on this particular chart. So I'm waiting for 52,626 to be taken away before I can go for longs. Until then, I'll be bearish and look to 50,525 as my immediate target, looking at all the structure on the monthly, weekly, and the daily. Let's go to CNX Energy and see what it's doing on the monthly. CNX Energy is in some kind of a support area. Yeah, this is where the breakout happened the last time around. Okay, so this is a nice area to seek some support. We could be heading a little lower. On the monthly, the cue is that we are in some kind of a support and we could go higher and test. Because we've swept these lows, the monthly candle, remember, is not complete. So we have 2 weeks to go for the monthly candle. On the current status, we have swept the lows and we are moving higher. But I'd like to see the weekly to give me some confirmation as to what happened in the last few weeks. And well, we did sweep and we did go higher. We tagged the high of this level and we tagged the high of this level too. But now we've swept the top of these two levels with this candle in the last week, and we've come back into the range of this particular candle. That tells me that we are seeing some kind of a reversal from the top. So this is our first target to see in the coming week. And then we could go lower and test this level too. That's the reading that I'm getting. And I suppose we could be looking at somewhere around this level as a target to see in energy. So with this analysis, I expect 30,890 odd, and then a test of 29,898, and then maybe a test of 29,305. This is what I expect the market to do as far as the CNX Energy is concerned. Let's go to the next chart. And so practically, we should be heading down on this chart too. And this is the trajectory that I expect in the coming days. So I'm not seeing a lot of support in the market in terms of what we're seeing on all the charts in all the sectors. Remember, the sectors make up the entire market. So interesting. Let's go to the monthly and see what's in store for us on the pharma. Again, this candle is not complete, so this fair value gap completion is not something that I can take a cue from. But as long as this was concerned, we've gone into a fair value gap, which was available at this level, and we have seen some kind of a bounce from here, which is partially welcome, but not giving me a lot of cues. Let me go to the weekly and see what the weekly is offering. The weekly is showing us that we were in a fair value gap that extended right up, and it did give us some support. But as it began to go up, we're seeing that this fair value gap, which is a valid fair value gap on the weekly, is now giving us the resistance that we can see on the chart. This is a bearish fair value gap. We're seeing resistance here, and the price has taken some kind of a resistance on the top. In the last week, we've also swept the highs of this particular candle, and we've come down. We're not into the body of this candle as yet. We've gone to the 50% level, and we've seen some kind of a reversal. Interesting move. Let's go to the daily and see some more action. Yes, we're seeing some support developing here in this area. So this is a good area. And if we can defend this particular area, we could be looking at higher ground on this particular chart. But if you see this getting defeated, then we would head lower back up, back into this equal lows, which is the area of 19,678. So if you breach 20,173 on the downside, 19,678 is on the cards. Whereas if we go higher, the area to breach is this particular swing high, which is the 20,600, 595, 600 odd area. If we breach that, then we could be going substantially higher, and we could then aim for fresh highs, which in my mind would be somewhere close to this level. So the moment we breach 20,595, we are in for some bullish action as far as this is concerned. So interesting, we can move lower if we breach 20,172 at the lower end, and we can go higher if we cross 20,595. So we're in a no man's land as far as trading in the pharma sector is concerned. This is a no man's land. We will have to wait for the fresh breakout from this candle's range. And once we do that, we get the cues for the coming period. Let's go to Nifty and see what the Nifty has in store for us. We'll go on the monthly. I'll have to remove all the old drawings to get me a clear picture. So the monthly is showing that there is still some way down to the next support level, which is in the region of the 21,200 odd mark, which I think was the June 4 low, which was when the election results were announced, and we had a big volatile move there. So that is where the monthly is taking us down. I can't depend on this candle, though it's facing downward pressure. It tried to go up, but has been pushed down in the last week. Let's see the weekly and see what's happening. So the weekly is finding some kind of a resistance on the top here. If you see thrice the candle, the prices have tried to breach this level of 22,727, and they've been unsuccessful. We did that in the last week too, and we've fallen down. So we are forming some kind of a range here, and unless we break this range, it's not going to help us. So initial thought process, this is our first target as far as the weekly is concerned, and this is our second target on the downside as far as the weekly is concerned. So we have these two levels to track. They're not far away. We could get them in this week. 22,100 is a drop of just about 400-500 points, which is 300 points actually. 300 odd points, which is very, very possible. Let's look at the daily and see if we get some more cues. Definitely pointing down. We've taken a reversal. We've, swept this high twice now. Not only once we've swept this particular high twice, we've swept this high also. If you see, we've swept this high also, with this candle. So we are definitely moving down. The targets, like I said, is 22,370, where we see some support in the fresh areas built by this fair value gap that we've seen here. So this is interesting. Nifty can give us some kind of a bounce from here. Let's see whether the bounce comes. We can see a bounce back up from here, but I would only take longs when I cross 72,723 is the scenario that I could be looking at. This is a blue trajectory that we have, and the red trajectory that we could build is that we could break down and we could breach this fair value gap and still keep on going lower. And this would be my red trajectory, right? This was the one which can happen because I see a lot of index, the sub indexes on the sectors not doing too well. So this could be a trajectory that we can get to. We could find some support here because sometimes you see that Nifty is being managed so that it doesn't fall rapidly, whereas the stocks fall in a very deep sense. Up for a gulp of water, please. Give me a minute and I'll gulp some water and get back on the charts. Thank you. So this is what we see on the Nifty. This is the Nifty futures chart, not the spot chart. So this is the Nifty futures chart, and these levels belong to the futures charts. Let's go to the next one. We look at the CNX MNC. Go to the monthly and see what's in store there. So we're seeing, we tried to go up higher after the sweep. We took a sweep and we tried to go up higher, but we did a brave move up, but again fell pretty bad in the last week, I guess. So let's go to the weekly and see what's happening. At this point of time, we have the sweep intact. We're above the sweep level. So I can't be very, I can't show a lot of, it's not showing a lot of weakness on the monthly, but remember the monthly candle is under formation. It hasn't completed. So maybe that's not the right cue to gather. And here's what you see. So what we've done here is that we have gone ahead and swept the highs of the last 2 weeks with the current week's candle, the last week's candle. That tells me that we are heading lower. Yes, we are heading lower. And this could be my first target on the lower side. And then we could have one of the targets lining up here. And then further down, we see some more targets here. So yes, we are heading down on, I'm sounding too sure about what we're doing on this particular chart. I don't want to sound very sure, but this is what the analysis tells me. With this candle in the last week, we are really heading, we're looking at some weakness. Let's look at the daily and see what the daily is telling us. I don't need to tell you what the daily is telling you. It's already looking weak because we've seen a sharp fall. We did breach this particular high with the Wednesday candle, and the Thursday candle has also fallen pretty sharply. And what we are looking at is a move downward. These are the two levels that I think we can look at happening in the coming week. And then these are the next few levels to watch on our way down. So this is the readout on the CNX MNC. Let's go to the next one, which is consumption. We'll go to the monthly and see what the consumption theme is offering us. Similar to the MNC, very similar chart to the MNCs. We are falling. We tried to take a little bit of a sweep down below, but hasn't worked. We've been pushed down, not even half the distance of this candle. So this shows that the trend is pretty strong on the downside, but let's try and see the weekly candle and tell us what's happening. As you see, we are getting deflected down from these high intensity areas. And even the last week, we're facing some kind of a fair value gap. So this particular fair value gap was created between the second week and the third week of Feb. And that resistance is still giving us some trouble. We've not been able to creep up higher. Normally, when you sweep the lows, you should go higher and sweep this part. The price should have gone ahead and swept this part with this candle. Maybe that action is still pending and we could go higher. So the trajectory that we could take is we could go higher and then fall back from there. This is something that is very, very possible in this particular chart. This is what I feel is your destination in the short run. This is something that we need to breach to go higher. If we breach this, the next resistance could be somewhere around this level, which is 10,930. But if it breaches 10,600, I'll be targeting this particular level, which is the 11,550 level, 535 level. So the moment I cross 10,600, I would like to turn bullish on this chart. You see a big resistance here, but this resistance can be overcome because it's a very big area on the weekly. Okay, let's look at daily and see if I get some better inference. Oh man, the daily tells me another picture. Probably this particular drawing that I made has to be rectified for the daily, and daily is giving me a totally different cue. I feel like I will be heading lower right away because this particular fair value gap that we see here is not sustaining. So this becomes little low probability. I'll make it a little less probability and make it orange because this is the highest priority that I get. From here, we have closed low. We have closed lower than the last day's candle, just about equal high, equal lows. And we probably can be heading lower with all the formation of the reds on the top. So this Nifty consumption looks weak to me. Let's go to the next one. This is the commodities, a very important component of the market. And if you see, we've seen a good bounce because we came down into the monthly support area here, which is the fair value gap. And though this candle is not completed, had it gone above this level of 81.55, 81.56, I would have been happier. We could still do that because the monthly candle is not yet over. And you see how beautifully we have created some kind of a good move in the last 2 weeks. The only problem that I see here is that we don't have a fair value gap on the weekly. If you see the high of this particular candle and the low of this particular candle, there's no gap. But we do see there is some kind of a pressure on the buying side, and we can get more cues because at the outset, I think this is the first target that I'm looking at. So we could be looking at this, could be the first target on Monday as we move higher, because we see this wick on the bottom is the reason why I think these two levels become important, because there was some support from the buyers at the lower end. And if we continue to see that support in the broader market, we could see these kind of levels coming in. And let's see at the daily what's happening. On the daily, the price is telling me a totally different picture, and I'm not happy with the markings on the top. That is the reason I was not drawing the trajectories. On the daily, I feel that, yeah, I still think that we are finding good support. So as long as we stay above this level of 8,006, we are good. If you see, this is the swing high. And if we can stay above the swing high, because we have crossed the swing high at this moment, we may even go down and then start to go up. So commodities probably is giving me a better read than a lot of other charts. And we're beginning to see some kind of a reversal. But then the only other thing that we need to look at is I will not be able to draw a volume profile here to get me a readout as to where the volumes happened. But this is an area which is a sideways area. And we are at the higher end of that area is something that we need to keep in mind. We are at the higher end of this box. And if we are to believe the moves that have been happening, we could move down back into the lower end of the range. If in a sideways market, that's what generally happens. And we could be heading for a 5% fall on this chart if we continue to move lower. Needed that gulp of water with. Let's go to the next chart. Let's go to CNXIT. This video has been long, but then there's so many components, and the video does get long as we go ahead and study all the sectors which make up the actual Nifty and the market. So Not very encouraging on the monthly. We tried to go up. We took a little bit of a resistance on the top and we are traveling down. We are seeing a fair value gap at the bottom. This is where we're seeing some resistance. The monthly candle is not over as yet, but this fair value gap is the formation which is giving support. But this support did not help because if you see it on the weekly, we've just come into this weekly fair value gap, but it's a very small gap. And I don't think this is something that is very encouraging. Neither is this particular fair value gap. Because very small areas of imbalance have been created. We could be trying to close them out. So for me, a good area to target for the Nifty IT is the 31,453 level. Believe me, that's a very, very rapid fall. That's like a 1,500 point fall, which is a 5% downside that I see on this stock in the coming days or weeks. So I'm afraid we are looking at a bleak scenario on the CNX IT. Let's go to the daily and see if it changes anything. No, we've been consistently facing these pressures, and we might see some support at the 34,000 level. We might see some kind of support at the 34,000 level, and that would be the first area to visit and see what's happening somewhere here. If we find support here, then we could be moving higher, but I don't see much of a chance of that happening. I'm still a little bearish on this particular chart, and Nifty CNX IT should be something that should give us cues with what's happening in the US markets. Because if the tech stocks, the NASDAQ goes up higher there, so will the CNX Nifty, but I don't see that happening here. That tells me that we are under some pressure on the US markets also. Let's go to the next chart. We will go on the monthly on this one. This is the CNX Infra. Again, we are in a good area. So we're trying to build some support from this fair value gap, but the candle is not complete because it's a monthly candle, which is incomplete. We came into this fair value gap with a strong downward move, and we're seeing a pivot formation in the monthly, which is slightly encouraging, but let's see on the weekly what it is telling us. Well, on the weekly, it is not giving me a lot of strength that I can see on the chart. I see that we are beginning to again see rejection from this area, which was the lows of 3-4 weeks. So this was acted like a good support at one point of time, and now it is acting like a good resistance. And the resistance that we saw in the last week was pretty good. My first level to target is this level, and the second level to target is going to be this level. And then the third target is going to be the low of this, the high of this, the high of this fair value gap on the left. So this is where this is our first target. This is our second target. And this is our third target for the coming weeks in the CNX Infra. Again, not bullish. Where can I get bullish? I can get bullish on this chart if I sustain levels above 8,062. If I sustain levels above 8,062, my first target would be this level, these two levels, where I can then hope for some kind of a reversal back up. And these are the two levels that I would aim for. The moment we sustain above 8,000, we could be looking at these two levels, 8,640 odd. So this will be about a 405% rise. And if we see a fall below 7,868, we could see a fall of about 400 points again. So a 5% move here or a 5% move there. We're currently in a no man's land. Under 7,868.70, I could go for shorts. Above 8,062, I can go for longs. This is my read on the CNX Infra. Let's go to the next one. The next one is the CNX mid caps. So let's look at the monthly on the mid caps. Interesting. We're seeing some kind of a support here, but we went higher and were pushed back down. Now again, the 50% of this candle's range was not even visited as yet. Imagine 50% has not been visited as yet. So sounds like a continuation of the move downward on the monthly. Let's look at the weekly and see what's in store for us. Remember, this is for the monthly candle. I'm going to take that off, or for the sake of my markings, I can still keep it on. Right? This is the monthly. I can take off the tool. What are we doing here? What we did here was we did see some kind of a support build up here on this fair value gap. And then we swept the liquidities on the bottom, and then we tried to move up, but we haven't been able to move up. There's been no sweep as yet. We are trying to come back and test some liquidity levels here. So the weekly is telling me that we haven't gone to the top of this particular candle. So the first destination was this candle, and we have not topped it. So this still remains as a destination. This also remains as a destination that we could tag. So I'm looking at these two levels with a lot of interest on this particular chart. And the Nifty infra could give us a little higher, could give us a move which is a little higher than all the others that we're seeing. And these are the three levels that I expect to tag in the coming days on the Nifty infra. I would go short only if I see a breach of this level, which is the, so we can say we can go long only after we breach 49,800 for the targets 50,900. And if I have to go short, I will go short only if I breach this level of 47,863 for these two targets that I have in mind here, which are the 46,889 and the 45,435 levels. So we're in no man's land right now, and I will go short once I cross 47,863 for the first target of 46,889. See what's happening at this particular level, and then if I still see a breakdown, 45,435 is my next target. This is as far as the weekly is concerned. Let's look at the daily and see if something different can happen. No, we are feeling bearish. Look at the number of down candles besides the one strong up candle, which did not create any impact, and we are ending lower. So these levels that I've marked sound very, very possible on the chart, and the trajectory that I can think of that we could get in the coming days is the 47,863, 46,889, and 45,435 in the short run. Again, not a bullish scenario on the daily chart. Looks like it's a breakdown that's bound to happen on the CNX mid caps. So mid caps, still no hope for the mid caps. I still see them falling down. We saw sharp reversal, but this was only met with fresh selling, and every move up is being sold into. The gulp of water helped me. So the next chart that we're going to look at is the metals. Interesting, very interesting. So we've seen a good reversal in the metals. And from where do we see it? There's no fair value gap to show for. So what was the fair value gap? There's no fair value gap to show for in the monthly. Surprising move, not on the expected range. We did go up, and not the monthly candle not giving us much cues. We did see that we have actually not swept any liquidity here. So the last liquidity that we swept was this level, which to me doesn't sound a very convincing area of liquidity squeeze. I still feel that there's some more downside on this, but let me take some confirmations from the weekly chart. Well, what we see here is on the weekly chart, we have a fair value gap on the bearish side, which is what is resisting the price on its move higher. It's the bearish fair value gap. But then we also have a bullish fair value gap here, which is going to support price in the coming time. So as I see it, we are in for a tussle here, and I'm not going to predict what's going to happen in this chart, on this chart. And the key level for me here is going to be this particular level from where we broke out, 85 49. So 85.50 is what you could say on the round figure. And we could then, if on a breach of this, we could then target the lows, which could be the 8,000 level. That's a 10% drop on this chart if we break down. And if we break higher, then we should have a robust target, which should take us to this level, which is the 9,400 odd, 480 odd. So we could be looking at an 800-point run on this particular chart if we go higher, and a 5% fall in this chart if we go lower. So interesting, we could go higher and we could go lower too. So as I see this, I'm going to place this as my threshold for my longs. If we breach above 9,037, I will be encouraged to take some kind of a long signal. So this is what my signal is going to look like if I'm going higher. Whereas if I break below 8550 is when I take a short, which will take me down to 8,062. These are the two scenarios. You're currently in a no trade zone as far as the CNX metal is concerned. I would not take any trades in this sector. I would take a trade in this sector once we breach this level of 9,037 on the top side or 8,549 on the bottom side. This is the weekly. Let me look at the daily and see if I can corroborate something. Well, nothing changes there. We should breach this particular level to look down. We are in a big move. This bullish fair value gap tells you that there was a good move, but it is not sustaining on the top, is what we're seeing. It met with a resistance on this fair value gap. There was a volume gap here, if you see. We opened gap down on this chart. So this is a big volume area, big imbalance area. We tagged that and we were immediately pushed down. So if we move below 8549, 8062 is our target. A move above 9037 is where we think we can go higher and try to get to 99,500, near 9,500. That's the readout on these CNX metals. The next we have on our list is the autos. The monthly chart on the autos. We are in some kind of a fair value gap area, but fair value gaps not always work out. Look at this fair value gap here. So this is the bullish fair value gap. Let me just turn this into a bullish fair value gap first. If you see, we had another fair value gap here, which got broken like chicken chaws, cheese and chalk. It just got broken and the price came down. And this is now going to act as a reversal because this was a support, which is now acting like a reversal. I'm not too sure how we're going to play out on this particular chart on the monthly. We need to look at the completion of the monthly chart to get a strong analysis as far as the monthly chart is concerned. So we'll not take any cues from there. We'll go to the weekly and find some cues. So yeah, what is happening is on the weekly, we did try to go up in the last week, but found resistance and have begun to fall down again. So this is not good signs, and we've probably literally engulfed this entire weekly candle body. And to me, this looks like the first level that we were going to target. The second level is going to be this. And then this fair value gap comes into play, and we could see some sideways movements. But 22,188 from the existing level of 22,545 is about 300 points. That's a 10% fall in CNX Auto that we can see coming from the current place. So a 10% fall is substantial. All the Tata Motors and the Marutis and all the other sectors are, they are not in for a big move up as far as the index tells me. We will have to align them with the individual charts on the stocks to give us the cues. But let's go to the daily now and see if that anything changes. So we have a big fall on the daily on the last trading session, and look where it's actually engulfed the last two trades bodies. And that's a bearish sign. So this chart tells me 20,188 looking very much on the cards. So a fall of 10% coming in quick time on the CNX Auto is what I see on the charts. The next chart that we're going to look at on the monthly is the media, CNX media. Well, it's been falling. There are two fair value gaps which have been formed and which are acting as resistances. The next support visible to us on the monthly is only at 1278, which is about 200 points lower. That's a 20% fall that we can expect on this chart. That's huge. Let's go to the weekly. Yes, weekly also suggesting that in for a fall. We tried to sweep these levels here. We went higher, but we could not go above the previous candle close. And then we swept the previous candle close in the last week's move, and we began to fall down. So this is going to be our first target. This is going to be my second target, where the liquidity is resting. And then further down, the liquidity will rest at the fair value gap, which is the 1270 level. So this is what I see in CNX media. Guys, the fall still continues because a lot of charts on the individual sectors still showing weakness. Yeah, let's go to the daily and see if anything changes on the daily. Well, nothing changes. You can see how sharply we've begun to fall in the last 2-3 days. We've taken a sweep of the top and we've begun to fall. Nothing much to report. From here, we look to fall to these levels, which we've already marked here. So we're going to see a 200-point fall, 20% fall, maybe 150 points actually. 150 points, is it? Yeah, it's 150 points. So that's a 10% fall, not a 20% fall. If I stretch it from here, it's a 10% fall on CNX media, which is pretty sharp, pretty sharp. The last chart that we're going to look at is the real estate chart. We're going to go on the monthly and see what's it doing. Man, look at the fall. There's no respect for this fair value gap because this is one on top of the other. These are all breakaway gaps. And if you've seen the last post that I created for the fair value gaps, breakaway gaps don't generally give you a very good support. We have broken below the June 4th candle in this instance, and we are trending lower. We are actually seeing some kind of a formation, but the monthly candle is not completed, so that can't be the basis of analysis. Let's look at the weekly. Man, the weekly is showing some kind of support on the bottom half of this fair value gap, which is something that we should factor in. But given the move up in the last week, in the last week, and the move back down in the last week, we're sideways. Can't say that we've really broken down, but I still feel that we are looking at this level as our target for the coming week. And then we will move lower. And this seems to be the next target that we're heading for, because I don't see a very good formation on the weekly on this particular chart. And we could be heading for 720 from the current levels of 800. That's again a 10% fall is what I am seeing in the real estate market too. That's quite sharp. 10% fall. It's pretty sharp. Let's go on the daily and see if anything changes for us there. Well, nothing much. We're seeing weakness. We tried to go up with one candle, but came back down again. So we have seen two visits trying to go up, but every time we went up, we got some kind of a selling action at this level, which is the 840 level, and we have come down. So unless we breach 840, we can't look at longs. Is the Q. If you cross 840, the next long that you can see is up to an area of 860 odd. But if you fall, there's a huge 10% fall that I see happening in the next week and something. So maybe about 10, 12 days, we travel $26, 26 rupees in a month. Could be 3-4 weeks before we go down to this level of 720, 2-3 weeks before we go down to this level. So guys, that's it. We've had a long video. I've tried to analyze every sector chart that sounds interesting to me. We've done about 15 charts in a matter of probably 40 minutes. and we have broken down the market, and I have brought you my analysis. Overall, I see a lot of sectors giving us negative moves on the downside. That tells you that there's some more weakness in the market. And whatever gains that we saw in the period that we had in the last few weeks was nothing else but a sell on rise scenario. We took some kind of a support, we went up, but again, we are beginning to track lower levels. I would advise you not to get into long-term trades and wait for the level of 21,264 to be tagged before we can go higher. And this is an area that I'm looking at. We will see some kind of a breakdown at this area. We could then test these levels here before we start to go up. So ominous 20,500, 20,800, 20,400 is a level that we could see before the end of April and May, and that's where we will then see a fall. So I'm going to stretch on a longer time frame. I'm stretching myself to 21,264 as the level that I will target in the months of April and March, maybe no, but April, yes. This is what I'm seeing, and I see some more way down on our portfolios. So I mean, I think it's the danger on the downside is still not over. The correction is not over. We are still trending down. If you see from the top, we have fallen about 16% only. That's 4,250 points. Anything close to 20% is what is something that we are looking at, and 20% fall would lead us to about 20,264 is 19.36. 21,000 is close to 20%. And then we could do some kind of a swift dip into this level and then back up is what is the expected norm. So another 2,000 points to go on the Nifty. That's huge. Yes, 2,000 points on the Nifty is not small, and that is what we can look forward to. This could take us about 4 to 5 weeks to get there. 4 to 5 weeks. I could say even month of May to get us to that level. And that's when we try to go sideways in June and probably start to move back up in July is the best case scenario that I see for our markets at the moment. So that's it for this week, guys. This was the analysis of the sectors and the Nifty and the Bank Nifty for you. I am bearish, and my bias is going to be bearish as far as my trades are concerned until I see some kind of a sign. I have given you some signs on some charts that we did today. Expect to cross those thresholds to go high. Until that happens, I am remaining bearish for this market. That's my cue. And let's track the progress as it happens every 15 days. Should be tracking this progress and come back to you again and share my trades. What I'm going to do is I'm going to link up on the November video. You can see that video and see my predictions on that video, and you'll come to realize how well those predictions have come through. That reading is the same, same basis on which I form my current reading. And if that went right, it gives me great confidence that my current reading will also be close to accuracy. Of course, the markets are supreme and they can prove me wrong. And any news or any bit of information that is not out in the markets at this point of time, but comes into a release and the market can, turn around at a small whim. So that's not something that can be ruled out. But the current situation tells me this, and my job is to look at the chart, the current state of the chart, use my analysis pointers, and try to come with projections as to what can happen. So I'm building a bias. This is not a certainty. I'm building a bias with the reading on these charts, and that will tell me what to expect. And I'll be open to the short side. Every opportunity that I get to short at the right risk reward level is what I'm going to take in this market. Thank you guys for sticking with me on this channel, on this long video. I hope it helps you, and look forward to being with you again. Thank you. And I'll close this right now.